Welcome to Dr. Fred Markets. This is not financial advice. Every day, billions of dollars move across markets that most people don't even know exist. Crypto, stocks, AI, the signals are there if you know where to look. And that's exactly what we do here. Let's dive in.
AI is bleeding into markets faster than regulators can read PDFs. The verdict: AI is already steering US stocks, and anyone still trading like it's 2015 is volunteering to be exit liquidity. This is not financial advice, but here is the truth. Signal 1. US airlines are a live-fire testbed for how AI collides with human chaos, and the market is pretending it's business as usual. United just had a passenger allegedly try to storm the cockpit and assault a flight attendant. Spirit just finished begging the Trump administration for a merger life raft that never arrived. Southwest is throwing retirement parties at the gate like vibes can fix balance sheets. None of this hits an AI model cleanly. No LLM is predicting rando attacks flight crew at 30,000 feet with neat confidence intervals. But the Algos trading airline stocks still crunch structured data, load factors, fuel costs, macro prints. The human factor, violent passengers, political Hail Marys, operational chaos, gets buried as unstructured noise. So US airline stocks get priced like industrial widgets, while reality looks like a psychology experiment in a metal tube. That gap is where risk hides. Signal 2. AI in medicine is exposing exactly how dumb our smart models are in real-world chaos, and Wall Street is copying that same stupidity. Eric Topol's piece on the paradox of medical AI lays it bare. Models that look godlike in a clean trial buckle under messy hospital reality. Accuracy falls off a cliff once you leave the lab. AI radiology, AI triage, AI prediction, great on slides, shaky at the bedside. Translate that to markets. Backtests look glorious. Real-time trading is a bar fight. The market worships AI like it's an oracle, pricing anything with AI in the slide deck at a premium. But the actual implementation is noisy, biased, and regularly wrong when the environment shifts. US stocks are being re-rated on AI fantasies that function about as well as a chatbot giving you medical advice from TikTok. Signal 3. The tape is already whispering that AI hype is over its skis, even while prices pretend it's fine. S&P 500 at 717.84, down 0.45%. Nvidia at 198 cents, off 0.16%. That's a tiny move, but context matters. The AI poster child and the benchmark just had a nothing burger red day in the middle of a supposedly unstoppable AI revolution. Meanwhile, Bitcoin is ripping 2.1% to $81.86, and Ethereum is up 1.76% to $2,362.44. The dumb, non-cash flow assets are acting like high-conviction trades, while AI equities are trading like exhausted sprinters. You're watching the gap open between the story and the scoreboard. Here's the cliffhanger. What happens when Wall Street realizes its AI models are as fragile as hospital AI, while still being wired directly into US stock order flow? The connection: airlines, hospital AI, and today's tape are all the same story. AI is fantastic at cleaning up backtests and terrible at absorbing real-time human insanity. And yet we wired that shaky tech straight into how US stocks move.
Does what you just heard make you want to dig deeper? Good, because that curiosity is exactly what brought you here, and the second part is going to take it further. Let's go.
Airline incidents are the perfect metaphor. The system optimizes for efficiency until one human flips out and the whole model breaks. Medical AI nails the textbook patient, stumbles on the one with 6 conditions and weird symptoms. Market AI loves stable regimes, then panics when some drunk hits a flight attendant and macro shifts on a headline. But the money machine doesn't care. Quants deploy models that assume events are noise. Corporate boards jam AI strategy into every presentation to chase multiples. The S&P is now an AI narrative ETF in disguise. The index is concentrated in a handful of tech names that live and die on AI expectations. Nvidia at $198 is not a semiconductor story. It's a vote on how long the AI hallucination can run before someone notices the hospital data. Gorgeous in theory, messy in practice. Here's the blunt verdict. AI is not coming to markets. It already runs the casino, and the casino barely understands its own code. You're not trading earnings anymore. You're trading model error, regime breaks, and the collective delusion that AI can digest every shock without choking. So what does this mean for you? First, stop trusting the AI fairy tale priced into US megacap stocks. When an index is this top-heavy in AI winners, your diversified S&P exposure is just a polite AI momentum bet. Second, assume every AI narrative stock contains hidden implementation risk that won't show up in the slide deck. Medical AI already proved it. Flawless validation, ugly real-world deployment. Markets are next. The gap between backtest and reality is where portfolios go to die. Third, respect that human chaos is the one variable the machines still misprice. Passenger attacks, political Hail Marys, rogue headlines. This is the stuff AI models smooth out and real markets choke on. That's why volatility always feels surprising and why the smartest quants blow up the hardest. This is not financial advice, but here is the truth. If you trade US stocks today like AI is a magic crystal ball instead of a fallible, brittle tool, you're offering yourself up as food. The edge now is not worshiping AI, but understanding exactly where it fails, exactly like in medicine. The messy edges, the rare events, the stuff that doesn't fit the training set. Three-part takeaway. 1. AI already drives US stock pricing, but its real-world failure rate is wildly underpriced. 2. The S&P is an AI sentiment machine in drag. You hold AI risk whether you like it or not. 3. The only defense is intellectual brutality. Question every AI narrative, every smart model, every backtest that assumes humans behave. If you want more days where we tear through the AI mythology and call out what the market is really pricing, subscribe. Hit the like button hard enough to break the AI recommendation loop and share this with the one friend still telling you the model says it's fine. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's a wrap for today on Dr. Fred Markets. I hope this gave you something to think about, a new angle, a clearer picture, a better question to ask. Remember, this is not financial advice. Do your own research, always. If this video added value to your day, subscribe. It's free, it takes 2 seconds, and it's the best way to support this work and keep it free for everyone. You'll also find every video as a full article on the blog, drfredmarkets.com, and the newsletter is in the bio. I'm Dr. Fred Markets. See you in the next one.